A new phenomenon is taking the world by storm. But what exactly is it? In this series, I'll be seeking out what, why, and when it will affect my everyday life. I'll be speaking to experts to talk about this relatively new and exciting topic, which is being known as cryptocurrency, along with the underlying technology blockchain. And I want to see whether I should be getting involved. One of the aspects of cryptocurrencies which makes the establishment, shall we say, cautious, is the very fact that they're being so widely associated as causing disruption to existing finance systems. But changes or disruption can't be all bad, can it? The internet has changed or disrupted the way we communicate with each other. I mean, can you imagine being able to do your job these days by being dependent on fax machines or letters? In the same way, you could say that the mobile phone industry has disrupted or even kicked into oblivion the need for these. Everything that humanity finds and embraces has not already been found, and many things go quite quickly into the archives or museums. Branches of banks are being replaced on almost a daily basis as more and more people use internet banking.
In the early days of the internet, many believed it was a fad, but eventually it revolutionized the way we live. And financial transactions now take just a few seconds. There is no need to go to the bank office anymore. Laptops and mobile devices, they have turned into mobile banks thanks to the power of the internet. And similarly, when Bitcoin was introduced back in 2008, it wasn't largely seen as a breakthrough phenomenon, but now, after the appearance of new cryptocurrencies with a market capitalization of billions of dollars, even the leading players of financial markets got interested. Even IMF chair Christine Lagarde said that cryptocurrencies may result in a massive disruption. Cryptocurrencies like internet, they make financial system more efficient. They reduce transaction costs by eliminating the needs of intermediaries. They open banking opportunities for residents of the most remote places in the world, which banks just cannot reach. What is more, blockchain, the underlying technology of cryptocurrencies, it's secure, it eliminates possibilities of fraud.
Believers in cryptocurrencies believe that our established financial system is also archaic, and that along with other forms of 21st century technology, the internet now provides not just a different way of using the existing financial system, but a very attractive alternative.
Transferring money is as easy as never before nowadays thanks to the internet. There are millions of ways apart from bank cards such as PayPal, etc. With cryptocurrencies, money transfers will become even cheaper, quicker and faster, safer. The only thing you need to transfer cryptocurrency is a device and internet connection. You have absolutely no geographical restrictions and your transaction will take seconds. And blockchain protects you from the risk of losing your money in the process. Besides, you don't have to deal with bureaucracy or risk of physical loss like in case of cash or credit cards. Companies that have made billions from processing payments may see a significant share of their market disappear if they fail to adapt to the new environment. Some retailers have already been selling their goods and services in exchange for cryptocurrency, and you can buy a house for bitcoins. Such transactions are not only convenient but also safe.
But for most of us, where the rubber hits the road is knowing what difference cryptocurrencies are going to make to our everyday lives.
When you make a cross-border transaction, you have to fill a lot of papers, pay transaction charges, deal with foreign currency fluctuations, and it will take some time for the recipient to get the transfer. Cryptocurrencies like Ripple have been created in response to such challenges. Also, as sender and recipient use the same cryptocurrency, no charges related to exchange apply. Transaction participants do not have to solve any issues related to currency fluctuations. Many international companies see a huge potential in this area. For instance, IBM is already involved in developing a global payment platform for cross-border transactions. That said, there is a lack of regulations in this area, which triggers fears that cryptocurrency might be used for money laundering and legalization of criminal proceeds. But regulators in many countries realize all benefits and are actively implementing regulations to ensure transparency of cross-border payments in cryptocurrencies and cryptocurrency business in general. And we are actively seeing positive legislative changes which will add trust in this market and trigger its further growth.
But of course, the end game isn't transferring cryptocurrencies into pounds or dollars, it's about their acceptance as an alternative.
I don't think anyone within this space is seeking to be legitimized by the traditional financial system or the regulatory bodies. What we are creating is an alternative. The ability for everyone to transfer value on an equal level playing field, something that the regulators have never been able to achieve, ever. Whether that be deliberately or whether that be just something that they just couldn't actually achieve, irrespective of which 2 billion people on this planet are gleaming the benefits of the creme de la creme of what the financial system has to afford, very much to the detriment of the majority of the world population, which is 5 billion, right? So we are not looking for any form of classification or stamp of approval from the regulators and the traditional economic system. What we do want is the environment that we are operating within as companies and as entrepreneurs within this space to be as palatable as possible to spur and allow innovation to grow organically and to not be stifled and not to be stunted. Because the real irony is the end game for cryptocurrencies is not that they regulate us. The true irony is that once this technology really does hit mainstream, once we actually have ubiquity, the technology that underpins blockchain will regulate the regulators. It will regulate the banks, it will regulate government, it will regulate the whole establishment. Everything that we consider to be acceptable and status quo will completely change. And that is the importance of blockchain technology.
Cryptocurrencies are still developing asset class and are very volatile. But despite this, they are gaining more and more popularity while providing amazing profit opportunities. Cryptocurrencies are now being traded on exchanges worldwide, and some major global players have already recognized their importance. So for example, Goldman Sachs has become the first large Wall Street firm to make markets in cryptocurrencies. While two of the world's largest futures exchanges, CME and Chicago Board of Exchange, have launched Bitcoin futures. Cryptocurrencies have also become a part of hedge fund business. According to various estimations, the number of hedge funds with a cryptocurrency or blockchain focus stand at roughly 200 at the moment. And industry specialists expect the number to double or even triple over the course of 2018. So for example, Michael Arrington from TechCrunch kicked off a $100 million hedge fund, Arrington XRP Capital, which is entirely based on cryptocurrency investing. After the market adopts the new reality and with more rules and regulations in place, the cryptocurrency trading volume is sure to grow.
In the property industry, a new form of borrowing has been birthed in recent years: peer-to-peer lending. Peer-to-peer lending has become popular because it's simple. One man agrees to lend to another for an agreed interest rate and for an agreed period of time. A simple lending document is created by the parties and then executed, and both move happily on. It can be done in days, not weeks or months. I suppose this is actually a disruption of conventional lending and must upset the financial lending institutions.
Global community tends to opt for P2P model more and more often when it comes to buying and selling services. The P2P economy, which emerged thanks to the internet and IT revolution, means buyers and sellers can interact with each other without any intermediaries or bureaucracy, while transactions are conducted much quicker. Such developments resulted in lower transaction costs and lowering prices for products and services. Uber, Airbnb, or eBay are just a few examples of successful companies that are part of a sharing economy. PayPal is one of those great examples in the financial industry. Furthermore, digital payment processing companies have the power to restrict or seize accounts and money within them. This is something that cryptocurrencies will end once and for all.
I believe it's difficult for people to grasp what this space is all about, what cryptocurrencies and blockchain technology is all about, because it really is a completely fresh idea. It's a completely new take of how we engage in commerce. A perfect example of that is it challenges us and it makes us revisit what is money's role in society. And then we have to look into what is our interactions with money as well. And money up until a blockchain era was something of personhood. It is one individual sending money to another individual or a collective of individuals trading underneath the banner of a corporation. So in blockchain and in cryptocurrencies, that changes. We can now have machines that own money. So to speak to an everyday average individual who's not tech-centric or even financially centric, and expect them to grasp all of these different terms and these acronyms and to take that and consume that straight away is a tall ask and a tall thing to expect from somebody, which is why there are companies out there now who are dedicated towards this space to help make it more palatable to the everyday individual.
As we've already established, education is everything when it comes to getting involved with something as new or, dare I say, revolutionary, that has the ability to change our everyday lives.
The financial industry is going more and more digital, with fintech companies inventing new technologies that are quickly adopted worldwide. Education, what helps investors benefit from these disruptions. And education is especially important for cryptocurrency investors, given the volatility of this area and uncertainty surrounding it. So investors who are well aware of what is happening right now will be able to make more accurate projections, which will increase their earnings potential, of course, and eventually improve their finance and the quality of life. In addition to higher earnings potential, education protects you from unnecessary loss and risk.
Every currency provider, or shall we say currency creator, has embraced cryptocurrencies with a goal, a distinct vision of how their currency can be a major player in this revolution that's changing banking and finance forever.
Companies launch new crypto projects and countries adopt new legislations. So it's really important to keep up with the changes in order to be able to benefit the most from such amazing opportunities. This makes resources such as CoinDesk or Covesting's crypto intelligence portal even more important, as they allow investors to stay tuned with what is happening in the industry. And more importantly, less experienced investors can benefit from daily trading ideas and market analysis provided by professional cryptocurrency traders on Covesting Crypto Intelligence Portal. Many investors fail to benefit from amazing opportunities offered by the growing cryptocurrency industry because of lack of knowledge or necessary tools. So basically, many investors simply do not even trust the existing cryptocurrency trading platforms, as most of the exchanges are not legally transparent and they don't offer the necessary trust, and they're registered in places that do not offer proper asset protection. In addition, not all of them are properly supervised or even handled by professionals.
It might surprise you to know that former bankers are now working in the cryptocurrency industry.
So Covesting is led by the world-class team with a background in trading, investment banking, blockchain and fintech, coming from companies like Saxo Bank, SEB Bank, JP Morgan and others with accumulated trading experience over 100 years. Core team members have necessary experience of dealing with various asset classes, trading platforms, things like that. So customer service is another gap in the cryptocurrency space that Covesting aims to fill. It's really important, and 24/7 multilingual support is something crucial, especially dealing with such volatile markets as cryptocurrencies. So all in all, Covesting aims to set a new benchmark in the industry and provide transparent and compliant platform which is designed for both beginners and experienced traders.
What that means, or certainly implies about the future of cryptocurrencies, is that whether the institutions like it or not, they appear to have a future. But just how big? Globally, it's being said that investment money is gradually shifting towards cryptocurrencies through a number of small, emerging online brokerages and platforms. While few of the major banks are responding to the shift, some are. Goldman Sachs, for instance, have stated that they would be open to a dedicated cryptocurrency trading desk once regulatory hurdles have been crossed. In the meantime, before the end of 2017, Next, the UK-based business research company, had indicated that there were already 124 registered crypto hedge funds believed to be handling over £2.3 billion worth of assets. Then, of course, there are ICOs, or initial coin offerings, and online cryptocurrency trading. Well, I can honestly say that this look into what can only be described as a worldwide 21st century phenomena has been truly fascinating. Are cryptocurrencies here to stay? It would appear so. Will they change the way we deal with finances in the future? It seems that too could well be the case.